How are you guys doing? Welcome back. Today is February 10th, 2022. I'm back. I actually missed yesterday because my cat had to go to the vet. Talk about that in a second. He is fine. We're all back and back at it. Anxiety-ridden day, but hey, life happens. You're going to take what you get. And you know, just like the surfer analogy in my course, you can only take the waves that are given to you. You don't get to control that. You can only control yourself. And here I am. We're back at it, ready to go. Thanks for being here. If you are new, my name is Evan. This is By the Bulls Trading. I could do the whole intro thing, but it's fine for the day. I want to just get into this. If you are a brand new watcher, thank you for finding me. Thanks for being here. It means a lot to me. What's more important is that I have a free 25-part class for you. It's on my YouTube. I'm sure if you found me here, you can definitely go find my course on my YouTube page. It's very easy to watch. It talks about all the things I'm talking about here today. Supports, resistances, trend lines, patterns, EMA lines, the volume profile that I like to talk about, RSI, stochastic, and the vortex indicator. All 9 of these things make up my technical plan. You would have seen on the screen all the lines, what they mean while I do this video, and I appreciate you to go check that out. They'll save you a lot of time and save me a lot of time and also make you a better trader. It's fantastic. I talked about this earlier. This weekend is my 1-year anniversary of starting my business officially. Wait for Saturday and Sunday. I have one deal I'm doing. This is it. I'm not going to do another deal for months probably at this point, honestly. This is the best one I'm going to have besides Black Friday. It's my Evanversary, you know, insert from cheering, whatever. The Evanversary will be Saturday and Sunday, and then I'm cutting it off. So wait for that. Check that out. If you want to support me, if you want extra content, 5 morning newsletters, 5 nightly newsletters, early video access, a bunch of great stuff, the whole entire course, 25 extra lessons, all these kinds of great things. Check out the deal coming this weekend. But if you want to just stay here with me and have just this nice online interaction, by golly, I'm glad that you're here. That's okay. I have 7,600 great subs. Thank you for joining. I can't compete with the larger ones without your support. I'm going to give you 5 seconds to like this video, subscribe to this dope channel, and of course, leave a comment down below. To encourage you, I'm going to have some awkward eye contact with you so you scroll off my dumb idiot face. Let's do this.
Prolonged eye contact. Prolonged eye contact. Prolonged eye contact. Prolonged eye contact. Prolonged eye contact.
Thanks. So, I hope you guys scrolled off and did that. That'd be fantastic. Lastly is that I added a new part to our videos. We're going to call it the Gremlin Cat Cam. Ba-da-da! So you can see we have old boy. Oh, there we go. I got to make sure. We got old boy right here on our camera. I actually went out and bought a $100 webcam just so you can see his face. I think he wants to be in the videos. You know, he's always crying on my damn face. He always wants to be involved. So there you guys have it. On the smaller cam talking about the stocks. You can also watch my cat being an idiot. So I thought you guys really enjoyed that. With that being said, 8 great picks today. I just love the idea. With that being said, let's get into it. So first is CDW. It's a great looking channel up. Yes, the channel up isn't perfect. It is what it is. But this lines up pretty well. What I'm looking at here is that we have a nice higher lows. 1, 2, 3, 4 hits. It's important to note that because any one of you idiots out there, any one of me idiots right here, can draw a trend from A to B. But the A, B, C, D, E, and beyond really shows consistency. Really brings it from being an okay stock to a great stock to watch. What we can also see is that this gap area, right there, gap, and then quick move. We definitely have a volume gap here. I can show you that later in the volume profile video. And then we have an old resistance becoming a support. Right here, it could drop 2-3% maybe and be right where we want it. I will note that earnings, right here as we can see, is coming up on the 9th at 6 a.m. must have just happened. Massive overreaction. But boys and ladies, it's left us a gap. If you don't know anything about the stock market, a lot of folks call it gap trading. Gaps like to be filled. So we can see plenty of times here, this gap here gets filled. This gap here got filled. This gap gets filled. Every time there's a gap left behind, 9 out of 10 times, it's either A, going to be filled, right? There's none right over here. You know, there's a small one here. But gaps take off and they get filled, or it's an ignition candle showing massive momentum and it leads to a new trend. So this gap here I want to see filled, but it could be the ignition candle of a fall off. So I don't want to get overly zealous, overly quick here. right? But this does drop down 2 or 3%, and it's like 2 or 3 o'clock in the afternoon, and you want to kind of buy in and hold over the weekend, I'd be fine with that. Overall, great looking stock. I love what I see. Let's check the indicators. What's so dope about this channel, besides my new dope cat cam and me, you new kid, is that we use indicators as the icing and technical analysis as the cake. What's great is that indicators show us 4 major things: momentum, trend, volume, and volatility. That's it. A lot of beginner traders are going to use this as a crutch and be like, well, it's oversold, so it must be a good deal. No. That's not how that works, right? The structure of the technical analysis will help prove and show to us that it is a good value. So, of course, if you are new, you'll see live what a veteran sees, but we're not going to rely on indicators like a bunch of amateurs do. They're here just to help us. Let's look at them together, and I'll show you what I mean. So, firstly, the 10 EMA is blue, the 50 is purple, and the red is 200. That's the weakest, medium, and then the strongest. What's great is that we have all 3 here above us, showing that we have a good value. Now, is this like a death cross? Yeah, kind of, but it's a good value. You could buy off momentum. I'm sure there's some stocks we'll talk about with that. This is definitely a value purchase. The reason I say that, RSI, it's getting low. Stochastic, it's getting low. I don't see any divergences. It's fine. It's just negative 60 is a fine deal. Bulls are at the bottom, and bears are at the top. If CDW is going to stay bullish, it's going to be here or 2 to 5% lower. If this thing really does crap out and tank on us, I wouldn't touch it below that support line or the trend line. But as we get down there, the risk versus reward is immense and makes a whole lot of sense. So CDW, I'd watch list it. I would take it easy with the markets being this choppy. I would wait for a strong support on an index that you enjoy. Buy there. But for now, CDW is definitely a watch in my opinion. Next is CKPT. I'm pretty confident this therapeutics company is worth like 94 million, so it's very volatile. But look at this is its whole entire time. IPO price was like 216, and now it's sitting at 227. It's just gone sideways for months here. What's great, once again, you could argue there's a trend line forming here. I wouldn't. The reason being, again, it's just like 2 hits. It's not enough to do anything with. Like it's breaking down anyways. No real trend line. It's a simple support play. I think right here you could risk, if you were to buy in tonight or tomorrow, 4 or 5%, a good amount, but again, a bad move here is 10%. It's already 2 to 1 without a breakout. If it's me, I'm waiting for some form of life here. I'm not rushing in, especially with 5% risk. If I can get in at 221, that's a wildly different story. 218, wildly different story. If I can see it's 3 or 4% lower, I would definitely go for it. In the middle here, I'm not oversold. Right? I'm not overly sold to buy in. So I'd give it a day or two. But we do break this resistance trend eventually, show some life, it should make a big move. I will say historically, you go back, it consolidates, massive breakout. It consolidates, massive breakout. Consolidates, massive breakout. Consolidating, hopefully a breakout here. I'm sure there's a wedge somewhere in here. You could probably be like, well, this is it, kind of like that, right, with one little break here. It is what it is. It's a very simple support play. I love what I see. I would definitely check it out. Let's check the indicators. A 10 cross is fine. It's fine. And what I mean is when price crosses the 10, usually have some pretty nice day trading opportunities and small run-ups. Again, it's nothing to write home about, but they're definitely there. While you're beneath the 50 EMA line, they're not going to be that great, right? While the 50 is blocking us, it's being a whole entire barrier for us. I wouldn't play either crossover. I want to buy in the value. I think we're going to have value soon because RSI is pointed down and coming down nicely. Stochastic is pointed down, coming down nicely. And then Vortex, again, is a little bit overbought here. I want to see it kind of come down. So could you play a crossover? Yeah, it's possible. But I think for CKPT, the goal is risk management. Especially in this kind of market, the goal is risk management. So I definitely give it a check out. But this one is very reliant on A, your due diligence of this therapeutics company, which I expect you to do. And then B, the macro market. So if the macro market's like good and green, this should get some life. Otherwise, wait for value. But right here, CKPT, I love what I see. I would definitely check it out. Next is CNSL. Probably my favorite play of the day. There's a few great ones, but I love doing a lot. The reason is it's definitely wedging down. And what happens? We have a nice support, then it broke down. But again, we have plenty of consolidation, breaks down, consolidation, breaks down. But I think here, I want to see if it makes a big move up. I mean, it makes big moves from the trend line. I would definitely give it time, let it do its thing. But 1%, 1.5% lower at this support area is very little risk. If we do get a breakout, it could be immense. I think HRTX just did that. Sleep Number just did this. And with this consolidation sideways into the resistance trend, that's a great go signal. If you break above this, you can go long, or if you want to buy the value, you can go long here. Of course, 650 is an absolute steal with this support as well in this trend line. So this does collapse on us. 650 is an absolute steal as well. So I think it's a great watch list item for either a breakout here or buying lower if the markets do tank. But I love what I see overall. When it comes to our indicators, a 10 cross is pretty worthless, as you can see. I mean, it's fine. It's fine. It has some good run-ups, right? If you cross the 10, you have some nice run-ups. And right over here, right over here. But as we're consolidating, it's pretty null and void. A 50 cross is a much bigger deal. So right here, I think it's just fine. RSI, it's fair. Stochastic, it's fair. Bulls and bears are both fair. It's consolidating. And the reason this is big is because all stock market moves, the big ones, usually come after consolidation. Stocks can do three things: ascend, descend, and consolidate. And those descensions and ascensions come after consolidation, which we're seeing here. So CNSL, watch listed. If it does break down, great deal at 650. If it breaks out here, great one to go into the weekend with. I love what I see. Next is OGEN. I call that OGEN over here. Made a gorgeous 54% move. I didn't catch it. Womp womp. But right here again, it's looking consistent, right? A very nice trend line. And again, what happens? It consolidates sideways, blast off. Consolidates sideways, blast off. Consolidates sideways, blast off. What's this? This is the same exact setup as the other ones I've been talking about. Again, I want to get in closer to 0.40 cents, exactly 40 cents. Even 40 cents and down here is really good. Anywhere down here is totally fine. If it can be 2% lower, we're really mitigating risk at that point. But if this does come down and get down here, you have very little risk. And again, a nice move, just an average move down here, would be about 10, if not closer to 12%. A full one would be about 20, and a breakout can get to 30, 40%. It's another very small therapeutics company, so your due diligence is very important. It's coming down. It's not having positive earnings. It's definitely a technical trade, so don't get caught with a bag. And again, do your extra due diligence. But this support into a breakout, like it always does, is pretty enticing. When it comes to our indicators, 10 cross is pretty worthless. It's good for day trades, like 3 or 4%. But a 50 cross is what you really need. If you cross the 50, you're prone to have a massive move, and it's right here. That's what we're fighting for, so I'm watching it. If we kind of go longer and sideways for a few more days, it kind of keeps coming down. We could see that. You cross the 200, you're going to be in your best trade of the year territory. It looks pretty good. RSI, it's fair. It makes sense. We're going sideways. Stochastic is fair. Again, it makes sense. We're going sideways. And bulls and bears are both low here. That's interesting because if the bears are low and the bulls are low, the implication to me here is whoever gets volume tomorrow in the next few days should really have a good possibility of popping off intensely. So this could be the make or break for OGEN. This could be the last time it's playable from a technical standpoint. But right here, it's a great value. I love what I see. I'll check it out. It's printed before. I want to see it prints again, but I do love what I see. Next is PDM. This is a really nice support play. Again, anywhere near 1660 to 1680 is a great looking support spot, and we're right there again. Earnings, massive overreaction. Earnings, massive overreaction. Went back up, came back down. Earnings ran up, ran down. Earnings ran up, ran down. Earnings ran up, pullback. So again, it looks like this is a nice overreaction here. We could easily risk 2, maybe 3% at most to see a nice move of hopefully 8 or 9%. It's a very easy support play. What we're giving up with convergence, which is what I talk about often in my videos. Convergence is when all the technical stuff comes together with gravitational forces pulling us higher, trend line where support is, yada, yada, yada. Got a whole video on that. Is we're giving that up for simplicity. It's a pretty idiot-proof play. I say that word lightly. I'm sure someone would still goof it up, right? This is a very idiot-proof play because you drop below 1660, you can probably just cut it and get out, right? You have clear risk, clear reward. I let that bad boy rip. PDM looks pretty good. Let's check our indicators. Important to note, 10 EMA line crosses are pretty good, especially over the 50. You cross the 10 and the 50, nice run. You cross the 10 and the 50, nice run. Below the 50, it's going to be a resistance. It's going to be resistance, right? So we could wait for a 10 crossover, but that'd probably give us about 2 or 3% room to run. It's not really worth it. I think buying the value makes sense. I think we have some form of value because RSI is low. EMA lines are on top, showing us we have value. Stochastic is low. I don't see a divergence that all checks out. It's just low. Bulls are low, bears are high. PDM overall here is a very good support play. I think it's a nice one to watch. It's super clear. I do like what I see. Again, we gave up convergence. We don't have much in the way of like, oh, it has a trend line support play. But for a beginner who's feeling nervous or risking a lot of money, 2% risk here makes a lot of sense. So PDM, I'd watch this. I do like what I see. Next, SRCE. Oh, he's waking up. His SRCE looks really good here. Oh, big claws. That's what the camera likes to see. He's a good boy right here. This is a nice wedge up. I think wedge ups do tend to break down eventually, but I think it's still fairly wide enough that I wouldn't get worried about that quite yet. You can also argue at this point they may be making a channel up, right? As you can see, it's making a possible channel up here. So I'm not overly bearish. Usually I would be bearish, but this channel up area over the last like 8 months, 7 months, gives me much more confidence in this. A great support area. The POC, if you watch my volume profile video, would show you that this is definitely our strongest support spot. Dividend always has folks taking profit from the dividends usually. It looks pretty good here. Overall, clear support, clear trend. I do love what I see. I would wait for a drop, maybe like another 1 or 2% to really mitigate risk and get your most profit. But right here, I love what I see. When it comes to our indicators, 200 EMA line cross is fine. You want to wait for a 200 crossover? That's good. 10 crossover is good. I think both work fine. Especially the 200 really shows life across 200. Easy 5% moves. Looks really good to wait for that. I want to buy the value. RSI, it's fair. Again, we're going sideways. What's the change the last like few months from here over? We've changed 1%. It makes sense that over here calibrates as fair value. The Vort or the stochastic, not much in the way of divergences. We had one here, from here to here, and here to here. That's what we had. Let's move up. Not much in the way of that, just a good value, and then bulls are low, bears are high. I do think SRCE has a good chance of dipping just a bit more, and if it were to take off without me, I'd be fine. I think I want to see it 2% lower, really mitigate my risk, and I want to make sure that's clear. In this episode with the kind of choppier markets, it's okay, and it's smart to mitigate risk. Wait for the strong support on the indexes to make a move and to manage your risk. But overall, right here, SRCE, I do love what I see. Next is VERV, another therapeutics company, so make sure you do due diligence. VERV, like the band VERV pipe, sick joke, is a really nice looking wedge down. Important to note that the IPO price is being a new support here. This is a support, this is a support. We just broke out of the wedge. A lot of time with wedge breakouts, we come down, retest, and then take off. That's the theory here, because it's such a clear play. Look at the resistance trends. It's so clear. Not often you see such clear plays like this. That's why I don't mind playing a retest. Again, you may be risking 3 or 4% here to see that, but a fine move here is almost 6 or 4 to 1 just to see there's resistance. So the support play in itself is good. This POC will be a strong resistance until we break over it, right? This is a great support, a great breakout, and overall, I do love what I see. It's not my usual play, but again, because of clarity, I'm okay talking about it. When it comes to our indicators, 50 and 10 retest. You see that? If we hold here tomorrow and we get a little bit of green, you could then use this support and these trend lines as a take profit / stop loss area. If you're like, well, I want to use the 50. All right, it goes green tomorrow. Well, I think that my block should still be green. It goes green tomorrow like this. You feel confident, that's fine. It then breaks down the next candle like this. You can just get out, that's totally fine. A great way to manage risk there with the EMA lines. RSI is up high. It makes sense it broke out. Stochastic is up high. It makes sense. I'm not as worried about this because it's not a bearish divergence. It actually had power here. That's okay, right? What I'd be worried about is that if this were to like start to kind of curtail over like this, and then this spot was higher, so it doesn't have a bearish divergence. Of course, it could come back down, right, and kind of give us a little bit more, value. But again, it is what it is. Bulls on top, bears low. It's not my usual value purchase. Like to find value, it's still low compared to the macro index and the macro setup of this whole entire play. But it's not like my usual like bottoming out kind of play like our next one is. But overall, I have the burpees because of my Dr. Pepper. I apologize. But VERV here, great value, low risk, massive reward if it works out. I do love what I see. Last is Walmart. Just like Kellogg, I don't like swearing on my channel, but fuck Walmart. I don't like how they treat their employees. It is what it is. I don't shop there in general because they're not nice people. I don't like how they treat people in general. But this is a really nice looking support play. It is what it is. I keep my emotions out of it, kind of. But this is a really nice looking support play. Minor higher lows. It did break down, so I mean, I just kept them on there. It is there, but this support play is genuinely great. The issue is earnings is coming, like right around the corner. I think maybe tomorrow or the next day. If earnings is bad, like Amazon, this bad boy is going to break down hard. So I mean, I wouldn't possibly buy in today or even tomorrow. I would definitely watch it and then check the earnings reports. My mega concern is this is a higher high, well then a lower high, then a lower high, and then a lower high, and a lower high, and a lower high. It's slowly making a descending triangle pattern, and those tend to break down. Right? The issue is they had a nice run up. It's now consolidating, and it may break down. Again, when I bet against Walmart, not often. I think Walmart usually makes good money. Fine dividend stock. It gives you like a percent every like 3 months. You know, good earnings. It's fine. But again, I'm not overly impressed here. I would go long, but I think waiting for the earnings is just as smart. EMA line cross doesn't work. It's too far away. 10 cross is fine if it does like, you know, kind of turn around soon. This does come down like this farther and they cross it soon. A 10 cross lower is fine, but right here it makes very little sense. RSI it's low, stochastic is low, bulls are low, bears are high. It's a very simple purchase for value in my opinion. Overall, Walmart, it should always be on your watch list, like a Tesla or a Google or Amazon or whatever it is, Microsoft. They're always doing fine. And again, I don't like them as a company, but hey, money's money. And if it does hold here, it's an absolute dub, absolute winner. There you guys have it. I appreciate it. I hope you guys enjoyed the cat cam. I mean, I think it's kind of funny to have my cat give himself a bath on camera. Pretty funny stuff. Let me see here if I can. It's a good boy. Oh, the camera. Oh, there he is. Okay, that's a good boy right there. So I hope you guys enjoyed. That's my cat for you. I'll see you guys on the next one. It'll be on Sunday. Again, check out the deal this weekend. It'd be fantastic. Have a good one. See y'all next time. Thanks.